Have you ever noticed the intriguing behavior of Bitcoin's price in the 18 months leading up to the previous halvings? This dance, as we like to call it, is not just a random jig, but a choreographed performance influenced by a myriad of factors. Let's waltz through some historical data. Before each halving, Bitcoin's price has shown a tendency to paint a similar pattern. It begins with a period of consolidation and accumulation, where the price moves sideways, often for several months. This is like the calm before the storm, a period of preparation before the big show. As we move closer to the halving date, the tempo of the dance picks up. The price starts to rise, sometimes gradually, at other times in sharp parabolic moves. This uptrend is often accompanied by increased volatility, with the price making dramatic leaps and plunges like a dancer leaping across the stage. But what drives these moves? Well, it's a combination of factors. Macroeconomic events often play a significant role. For example, during the run-up to the second halving in July 2016, the world was grappling with the aftermath of the Brexit vote. The uncertainty and volatility in traditional markets led many to seek refuge in Bitcoin, pushing its price up. Market trends also play a part. The anticipation of the halving often leads to increased demand for Bitcoin, as investors expect the supply cut to lead to higher prices. This speculation can create a self-fulfilling prophecy, driving the price up in the months before the halving. The dance of Bitcoin's price is a complex ballet, with each move influenced by a whole host of factors. But one thing's for sure, it's never dull. Whether it's a slow waltz or a fast-paced tango, the rhythm and flow of Bitcoin's price pre-halving always make for an exciting spectacle. So, as we've seen, the dance of Bitcoin's price in the run-up to halvings is a captivating spectacle, influenced by a myriad of factors. Now let's cast our gaze towards the future. What could the 6 months post-2023 halving hold for Bitcoin? First, let's consider the factors that could sway Bitcoin's price. A major influencer could be institutional adoption. As more and more businesses and governments embrace Bitcoin, demand could surge, driving up the price. With corporations like Tesla and nations like El Salvador leading the way, the trend towards institutional adoption is already underway. The question is, will it continue post-halving? Regulation is another factor to keep an eye on. While some see regulation as a threat to Bitcoin's decentralized nature, others view it as a necessary step towards mainstream acceptance. If governments around the world take a more hands-on approach to regulating Bitcoin, this could bring about significant changes in its price and overall market behavior. Now let's talk about potential outlooks. On the bullish side, some experts predict that the halving will trigger a surge in Bitcoin's price, much like the previous halvings. They argue that the decrease in supply coupled with increasing demand could send Bitcoin's price to new heights. However, not everyone is so optimistic. The bears argue that the impact of the halving has been overhyped. They believe that other factors such as market trends and global economic conditions will have a greater influence on Bitcoin's price. Some even suggest that the price could drop post-halving as miners sell off their reduced rewards. So, what can we expect in the 6 months following the 2023 halving? Well, as with any prediction, there's a degree of uncertainty. Bitcoin's future is influenced by a multitude of factors, many of which are unpredictable. However, one thing is certain: the period following the halving will be a pivotal time for Bitcoin, filled with opportunities and challenges. Whether you're a bull or a bear, the period following the 2023 halving is sure to be an exciting time for Bitcoin. As we wait for the 2023 halving, it's crucial to stay informed about the events and factors that could sway the market. For investors and traders, this stage of the halving cycle presents both opportunities and challenges. It's a time to be strategic and informed. Don't just follow the crowd, but rather carefully analyze market trends, keep an eye on regulatory news, and closely monitor Bitcoin's price behavior. Consider diversifying your portfolio, not just within the realm of cryptocurrencies, but also by incorporating traditional assets. This can provide a safety net against potential volatility. Remember, investing in Bitcoin is not just about riding the waves of price ups and downs. It's about understanding the technology, the economics, and the global sentiments that influence these movements. In summary, the halving is a key event in Bitcoin's life cycle that has historically influenced its price. As we look towards the future, remember to stay informed, stay vigilant, and most importantly, stay invested in the fascinating world of Bitcoin.